Hi everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, July 5th, 2019. We are now in the final hour of the trading day and the final hour of the trading week. As many of you know, in my opinion, the closing prices of the day are the most valid prices. I feel like the professionals move the closing prices to what the real value is. Therefore, those are the prices, the closing prices are the prices that I feel, in my opinion, are the most valid prices of the day to make your buying and selling decisions from. And that is why I wait most of the time, the majority of the time. There are exceptions, but that is why I generally wait till the end of the day to make my buying and selling decisions. So hope everybody had a good 4th of July, had fun, was safe, enjoyed some time with your family, watched some fireworks. Let me just move over here and see if we've make sure everything's running okay. Looks like it is. Hey Andy, how you doing? Doesn't seem like a Friday. I know. I was thinking the same thing. It feels like a Monday. I'm 100% with you, Andy. Hey William. Hey Greg, how you been? Hey, I'm doing well, buddy. Good to see you. Thanks for coming by. Always good to see you. Hope you had a good 4th of July. Hey Mount Doji. Mount Doji says hello everyone. Hello to Mount Doji. All right. Well, thanks for coming by today, guys. I appreciate it. And so let's see. It's been kind of a crazy day. We had the jobs report come out this morning, and they were stronger than people were expecting. And therefore, ironically, the market sold off pretty substantially early because it kind of cuts into the possibility of a rate cut or how much of a rate cut. So it's kind of a crazy, perplexing thing when you get reports from the economy that are stronger and the market goes down, but such is the market we're in. So okay, so here's the plan for today. So first of all, we're going to run the U.S. legal disclaimer. Then we're going to come back. We're going to go through my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. Then when we're done with that, we're going to do a little trader psychology. We're going to do a few minutes on trader psychology. Then we're going to go and we're going to go through all the stocks in my watch list. We're going to go down through each one by one, taking a look at the support, resistance levels, RSI levels, moving averages, possible V1, V2 triggers, look for divergences, all sorts of stuff. And if we find something at the end of the day, then we'll enter in a trade. Then, if that's not enough, when the market closes, if you have any questions whatsoever, please let me know. Just type them into the chat, and I'll be very happy to answer them, give you some clarification on something maybe that you didn't understand during the live stream. And then if you have any stocks or any symbols you would like me to look at, I'm happy to give you my humble opinion on those. So that is the plan for today. So first of all, let's go ahead and run that US legal disclaimer, and I will be back in about 40 seconds. So hang tight. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay. Thanks for holding on, everybody. Hey, Steve Burns is here. Hey, Steve, how you doing? Steve says, also great to be in this group. You're doing a great job, Greg. Oh, thanks, Steve. Thank you so much. If you don't know who Steve Burns is, he's a famous author and trader and mentor and teacher, and it's had a huge effect on my trading career. So many thanks as always, Steve. Really, it's an honor to have you here. And thank you so much for that nice tweet that you tweeted out today on Twitter. That was awesome. That's also an honor, really. Thank you so much. So Okay, well listen, let's get to it then. All right, so IWM, I did buy IWM back here on the 28th of June. And the reason that I bought it was because we had the 1050 SMA crossover. It's a good back-tested system approach for entering and exiting the IWM. The entry signal is when the 10 crosses over the 50, and the exit signal is when the 10 crosses below the 50. I took this as a mechanical trade, which means I'm going to stay in this trade unless one of two things happen. One, if it keeps going up, I'm going to continue to stay in the trade, and I'm going to phase out up and up and up until I get to the point where I run out of shares. That will be my exit signal on the upside. And to the downside, if the 10 crosses back below the 50, that will be my exit. So this is a good back-tested approach of trading the IWM. We did enter here back on the 28th, did hit 2 profit targets the very next day. So we took a few shares off the table. Immediately reversed. Next day went back up, took some more shares off the table, and today it was down quite a bit earlier on, like I was mentioning with the jobs report. But it has been able to move up since then. This is our first profit target of the day, 157.14. So we haven't hit that yet. So again, this is just a mechanical trade. You know, I like to have a variety of trades. In my trading approach. I like to have some discretionary trades. I like to have some trend trading or crossover trend trading, meaning moving average crossover trades or trades off of the 200. So I like to have discretionary. I like to have trend trades. I also sell puts. That's another profit center for my trading. And then of course, the SPY trade, the buy in the afternoon, sell in the morning, and we'll get to that a little later. So anyway, this is up today, which is good. Haven't hit the profit target, but the plan is stay in this as long as the 10 stays over the 50, phase out until I'm out of shares, or get out of the trade when the 10 crosses under the 50. So that's the plan on the Russell. All right, so Philip Morris we bought here Wednesday, Wednesday the 3rd, when we had this nice close back above the 200-day, and we also took out a fractal. Well, it did the day before, but mainly the close back above the 200-day moving average. So today, with the jobs report, the dollar went up. A strong dollar generally hurts Philip Morris. It's an international company that has to convert its foreign currency into United States currency. And when the dollar's stronger, that hurts the profit. So I have a feeling that is one of the reasons why Philip Morris sold off so strongly in the morning. Our initial stop on this is the 200-day moving average, which is 79.92. Right now we're at 79.96. So this is our line in the sand. Close under 79.92. I'm going to get out and just take a small loss from here to here. If it stays above the 200, I will go ahead and stay above the 200. You know, this is a good example here of when it was down here today, I wanted to sell it. I totally wanted to sell it. You heard me talk about the sitting on your hands example I gave you. You know, when your brain's screaming at you, you know, my brain was screaming at me, sell it, sell it, sell it. But it always does that. But fortunately, you know, from trading so many years, I have the discipline just to sit on my hands and go, nope, that's not the plan. The plan is at the end of the day, if it's under the 200, get out. And you can imagine if I sold it down here earlier in the day, I'd be a little put out that it's way back up here. So, you know, get yourself a plan and stick to the plan. That's important, right? Have the self-discipline to actually stick with the plan. It's easy to make a plan when the market's closed. Okay, I'll do this, I'll do that. You know, if then statements. If the market does this, I'm going to do that. If the market does that, I'm going to do this. But anyway, so 190.79.92 is our line in the sand, and we'll see what happens with that. If it closes under, I'll go ahead and just take that small loss. And small losses are okay. You're going to have them. You're going to have them a lot. You know, you're going to have them upwards to 30, 40, 50% of the time. It's just part of trading, so be okay with it. But, you know, a small loss is fine. All right, PayPal. So I did buy PayPal back here on the 28th of June, and the reason I bought it is we made this higher high. We had a bit of a pullback back into the value zone, which is fine, totally to be expected. It started to move sideways, indicating that there was not as much supply coming into the market. It was finding some stability. The next day, it spiked down. It tested the prices down here. The market did not like the prices down here. It didn't find any more sellers. And then the day after that, it triggered a V2. Here's day 1, day 2, day 3, day 2, washes out day 1, day 3 closes above day 1's close. And that is my entry trigger. If it would have happened on this day, it would have been a V1, but here's a V2. So again, nice move up, back into value, move sideways for a couple days, spike down, reverse. So I did buy this here at a 114.59. Next day immediately went up. I think I can't remember now, it was 2 or 3 profit targets here. I took some off the table. Next day came down a little bit, reversed. Did we? Yeah, we hit a profit target the next day as well. So, and then we hit 2 profit targets the next day, which was Wednesday. So we're out of about 40% of this trade today. And you can see earlier today, it had gone down and reversed back up. Again, good that I stick to my plan. My plan was a close under the 5-day or a close under the previous day's low. That's why I put this red line here. So, but it has reversed back up. And if it closed here right now, I would continue to hold this trade. So this is currently right now 116.06 for today. That is my line in the sand. And if we hit that, go ahead. We'll still have a nice profit. But if it stays above that, I'll continue to hold it, phase out as it moves up. Okay. And the ever famous SPY trade. Okay, if we have some new people here, let me explain why I take the SPY trade every day. I buy the SPY at the end of the day and I sell it first thing the next morning, and I do it every day. So you might ask yourself, why in the world would you do such a thing? All right. Well, I'll explain. This is based upon a study from @BespokeInvest on Twitter. Liz Ann Saunders tweeted this out. She's actually the chief investment officer for Charles Schwab. But here's the back study. Since 1993, if you would have bought SPY on the open in the morning and sold it in the afternoon on the close each day, you would have actually returned a negative 5.2%. But if you did the opposite and you bought at the close in the afternoon, you sold in the morning on the open the next day, you would have actually returned 568%, meaning that more than all performance on the SPY since 1993 came in after hours trading. That's the people bidding it up in the aftermarket and the people bidding it up in the pre-market and then selling into that in the morning. So it's, pretty powerful information. You can see the green line here. This is the buy in the afternoon, sell in the morning. The red line here is the buy in the morning, sell in the afternoon. It's clear to see that the move up in price came in after hours, not during the day. And that's why I shy away from day trading, because I know most of the movement happens in the after hours. So just the very fact that you're buying a stock, holding it overnight, there is an edge in that, and it's, you can see this from the numbers. So this was up until 2017. There was a more recent study up till January of 19 where the buying at the open, selling at the close, actually instead of returning negative 5.2%, returned negative 13.9%, and the buy in the afternoon, sell in the morning, instead of returning 568%, actually returned 634.2%. That's up till January of 19. And then Stephen Burns did a more recent study up till about, I think, 10, 11, 12 days ago into 19. And the number he came up with the buy in the afternoon, sell in the morning, was 712.63%. So this is why I buy the SPY each day at the close and sell it first thing in the morning. So we've had a super good run, but today was one of those losing days. We bought it Wednesday at 298.80. We sold it at the open this morning at 297.40. So we did take a loss, but we've had an incredible run. My gosh, using this approach. I've been using it since February 26th of this year, and it's been extremely, extremely profitable. I got to tell you, but there are ups and downs with this, right? I mean, you can see it had a great run up until about 01, and then for a couple years it had a downtrend, right? It had a drawdown. So, I only take a small position size each day, 10% of my account, because I know I'm going to run into these moves down, and I don't want it to affect me and the account too much, right? And I don't want it to destabilize me. So whether it's this approach or any other approach, you got to position size correctly. You got to position size with the size that, makes a difference if it goes up, but doesn't destabilize you too much if it goes down, because it's going to happen. I mean, we've been going up and up and up and up, and people kind of get programmed, they get used to that. But let me tell you, I don't know when and I don't know how, but we are going to have a pullback, right? Eventually we are going to have a pullback, that's for sure. And so, you position size correctly. Right now, everyone's making money. We've had a wonderful, last month and some more days on top of that in July. Everyone's making money. Don't get complacent. Keep your guard up. Don't get cocky, right? Don't feel like, oh, I can take this subpar trade because I've been doing pretty well. That's the downfall of a lot of traders. Is getting too cocky when you're making a lot of money, and getting too desperate and compulsive when you're losing a lot of money. So those are the two important times to really be on your guard: when you're making a lot of money, or when you're losing a lot of money. So I hope that makes sense. All right. Hey, Constantine. Hi, Steve. Hi, Greg. Hey, how you doing? Yes, he's here because of the tweet. Oh, good. So glad you came by, Constantine. Yeah, Steve was nice enough to tweet that out. And I'm glad you made it, and I hope you find this helpful. If you have any questions, Constantine, please let me know. That's a new one for me on the SPY. I know. It's pretty amazing. It's pretty amazing. Steve says, "Yet traders, investors get rewarded for taking overnight risk. Most returns happen in the futures market overnight and is reflected in the stock market." Yep, that's right. The daily SPY is pretty amazing. Yep, one of the craziest back tests ever seen. Mount Doji says, "That's funny you started the SPY on February." That's your birthday. Hey, mine's February 16th. Okay. All right. So listen, before we get into going through the watch list and seeing if there's any trades for today, I did want to do a few minutes here on this post. This is from @DMUTHUK. I really like his channel. He puts out good information on psychology and trading. And, the reason this resonated with me is you've heard me talk in the past many times about, looking at a chart, deciding that there's nothing there at the moment, but if the price did this or if it did that in the future, that would be a good place to possibly take an entry. Maybe it's a week out, maybe it's 2 weeks out. But the reason that, I like to look at it that way is because it's so far in the future, you're not going to make an impulsive decision about it. You are just going to look and go, yes, I think if it got there in a certain amount of time, that might be interesting to me. And, when I studied one-on-one with Dr. Alexander Elder, that's really what he taught me. He said, look out in the future 2 weeks, 3 weeks. And if it gets to a point, print out the chart, put it on your wall, and, you know, get involved with it then. He said one of his students lived in New York City. All over the walls were pasted up this kind of approach. You know, maybe IBM's here, but I need IBM to go over there, and then maybe it will have a bullish divergence or something, right? So when, and I apologize with this name, I'm not even going to attempt it because I'm just going to butcher it. But, you know, basically in his tweet, that's exactly what he's talking about. Be it stocks or goods, impulsive buying makes us repent later. It's good to have some time between when you decide to buy and when you actually execute it. This gap would reduce or even eliminate your impulse. And it's so true. So, you know, let me just give you a quick example. And I think, you know, you guys will remember this if you've been watching. But, you know, back here, this is square. Here we make a lower low. Then we have a rally. If you guys remember, I said, you know, there's nothing to buy here, but in the future, I don't know how long it's going to be, but in the future, if we come down, make a lower low and have a bullish divergence, and then have some kind of entry trigger to the upside, then I would be interested. So I was kind of foreseeing this right about in here. And so, you know, I looked at square, I made a note, I put it on my watch list to continue to see in the future if it did what I wanted it to do, then enter the trade. I wasn't buying here impulsively because it hadn't done what I wanted to do, but I did make a note and said, okay, if we do come down, I can see already that we're going to have a bullish divergence. Then if we get some kind of entry trigger, I'll go ahead and take the trade. Well, I took the trade right here. Because we had a bottom with the, we had a low and a lower low with the bullish divergence with the MACD. We had a V2 entry. We closed back up into the channel, and this was a 14% trade, right? And it's just because I saw it beforehand. I said, if it gets down there, I'm going to go ahead and take it. If it does, if, you know, I made a little pre-plan, and then when that pre-plan happened, I took it. So anyway, I did want to point that out. At DMUTHUK, be it stocks or goods, impulsive buying makes us repent later. It's good to have some time between when you decide to buy and when you actually execute it. This gap would reduce or even eliminate your impulse. So impulse control is very important. I talk about it all the time. So anyway, I hope that was helpful. All right, so let's take a look here, and we'll go through the charts today, and we'll see if there's anything here that looks decent. So Apple's up about 20 cents. There's really nothing here for me today. You know, we're hugging along that third ATR channel. We're at a 6670 RSI, so a little overbought for me. You know, if you got in it earlier because of the 1050 cross, it's doing well, but nothing here for me today. Advanced micro devices. Well, you know, we did move up. We did come back down into value. We did have a V2 signal here. I did not take this because we had the gap, and it didn't move sideways enough for me. It did continue up, but then it failed. But no V1 or V2 entry that got me back in here today. I mean, it is looking pretty strong. We're above a 50 RSI. We're still in the channel. This is not a V2 entry today, I don't think. Let's see the low here, 3073, and the low here, 3074. So no, this did not wash out this bar. If it had, this might have been a decent V1 entry. I mean, it still might go, right? But it's, for me, it's not a legitimate entry, so I'm not going to take this here. Amazon's up a few bucks today. Just to show you some prior, yeah, you know, the 5 crossing over the 50-day is a good back-tested approach for Amazon. I actually did buy it here I sold it 2 days later when it rejected the third ATR channel and had this bearish kangaroo tail. Also, we had the Fed meeting coming out, and so I did want to take that off the table. So it was a good 2-day trade. Now, if you would have taken it and just held this mechanically, you can see you would have done better. But most of the time when I take these crossover trades on stocks, I use them discretionarily. I use the entry of the moving average crossover for my entry signal, but then I manage them going forward discretionarily. So nothing on Amazon for me today. Boeing. Nothing here on Boeing. We technically do have a V1 entry today here, and it happened within the value zone. Here's day one. Day two did wash out day one, and if we close right now, it looks like it would close above day one. So technically it's a decent. I mean, it's legitimate V1 in a sense, but I'm not going to take this because we're at a 46.09 RSI. Usually my profit targets under the 50 is going to be the 50. So, we only probably have up until about here as potential profit point before we run into resistance. So the risk to reward for me doesn't really make sense on this today. So nothing on Alibaba. All right. I mean, nothing on Boeing, excuse me. Here's Alibaba. I was going to take Alibaba back here when we had this nice higher close back above the 200-day. We triggered this fractal. I did not take it because we had the Fed meeting minutes coming out and I didn't want to get in front of that, but you can see it would have been a really great trade had I taken it. So, sometimes getting out in front of announcements helps you, sometimes it hurts you, but there's always a lot of trades that come around. So, don't burn a lot of calories on missing one particular trade because you'll have another one coming around sometime. So nothing on Alibaba today. Caterpillar, we've moved up strongly since we had this close back above the 200. We moved up strongly here. I'm waiting now for a pullback, right? We've moved up. I'm waiting for it to drip down, come back into the value zone, move sideways for a couple days at least, have a nice V1, V2 trigger to trigger me back into the trade and possibly test those highs over there. And by the way, if there's anybody new to the channel, I talk about V1s, breaks over the 200. In the description of this video, I have 4 video links that I did specifically on my entries, V1s, phasing out. So there's some good information there. It wasn't a live stream, it was just a recorded video. So it's in the description here. So, if you haven't watched those videos, I think it probably would be helpful if you did. So just wanted to mention that. All right, so Canopy Growth, Wednesday had a nice V1 entry, as you can see. I didn't take it for the same reason that I just talked about on Boeing. The 50 RSI was right about here. It didn't give me a good enough risk to reward ratio. There wasn't enough reward on the upside compared to where my stop would have been on the downside. So it is down a little bit today. So nothing here, but that is a nice example of a V1. Cisco. Well, Cisco made a higher high, came back into the value zone, did move sideways, but I didn't get a legitimate V1, V2 entry to get into this trade, so I did not take it. Okay, this is DDM. This is double leverage Dow. So, we've had some issues with this third ATR channel up here. We're at a 68.93 right now, which is pretty high. Nothing there for me today, but just to show you a previous example of this trade, I did take a long trade back here on June 6th when we had this nice close above the 200-day moving average. My stop would have been a close back below, or I would stay in this until I phased out of all of my positions. And that's exactly what I phased, moved sideways, phased, and right about here is where I exited my entire position. So that was a really nice trade based upon a break above the 200-day, but nothing there today. The Dow, that's the same. Walt Disney, so we're above the 1 ATR channel. We're a 6584 RSI. This is an example of a V2 here where we move up, we come back down into value, and we did trigger this V2 here. I didn't take it though because it triggered when I went over the 1 ATR channel, so it was just a little bit too high for me at the time. I like to take my trades within the 1 and the -1 ATR channel. You can see it is moving up nicely today. Back here is a good example of a trade that I would take where we have a V2 entry. Here's day 1. Day 2 washes out day 1. Day 3 closes above day 1. And you can see that was a nice, easy, gentle trade to the upside. So that was a really nice trade for us. We got out about here. I was looking for a pullback into value. It did come, but I didn't get my entry, so I didn't get the second leg. So nothing on Walt Disney today. Here is Etsy. So, we're still below a bunch of moving averages. There's nothing here. I did actually sell a put on Etsy down to $55. That expires next Friday. And just real quickly, let me show you why I picked that strike price. So I like to look, when I'm selling puts, I like to look on the monthly, the weekly, and the daily and see if I can get one particular price that lines up with a lot of different support levels on each time frame. So on the monthly, the $55 level did match up pretty closely to the 1 ATR channel. We're above the 1 ATR channel, so it should have some support below it. Not for sure, but there probably will be some buyers there, but we'll see. But this is just one time frame at the 55. Now, if I go to the weekly, the $55 price does line up with the 50-week moving average. So that's another good sign. So now I have support, theoretical support, on 2 time frames. Then when I go to the daily, the $55 mark lines up over the 250 day just below me, and it also lines up with the 30 RSI. So that gave me the confidence to go ahead and sell the put down to $55. It's working out really well. I've got close to 80% of my premium. I actually have an order in today. So if I get out now, I'm happy to get out with 80% of my premium, not have to wait another week. But anyway, that one's looking good. Ford Motor Company. Nothing really here today. It's a 59.24 RSI. It's a little high for me. No V1s, V2s in here, so it doesn't really fit my parameters and my filter. Facebook. Well, Facebook has had quite a run. It's tagging these third ATR channels up here. It's a 66.49 RSI, so a little high for me to buy here. There's really no sorry about that. There's really no entries here. I know Steve Burns had a nice deep dip buy back on Facebook here when it bounced off the 200. I think you bought it here, and I can't remember where he got out, but I know it was at least up until here. So good trade there, Steve, but no new entry for me today on Facebook. 5 Below. Well, it did close back above the 200, and it has held the 200. Don't really feel like there's anything here that I would be interested in at the moment. Gold. Well, gold did gap down today. I'm kind of looking for it to come back down into the value zone for re-entry. Again, I like to buy things in the value zone for my V1, V2 entries. So it would have to kind of get into this range, and in addition to getting into that range, just because it's in the range, it doesn't mean I'm going to buy it. It means that it's in that zone, but then I need a V1, V2 trigger to trigger me into the trade. This was a nice trade we had back here on May 30th that you can see was in the value zone. I didn't have a V1 or V2, but what I did have was I had a 520 EMA cross, which is a good back-tested approach for gold, and it also took out this fractal. A fractal is a high with 2 lower highs to the left, 2 lower highs to the right, and they all happen within the channel. So I did buy gold here, and we phased out all the way to about there. So that was a great trade, but buying up here is a little bit different. I needed to come into the value zone. All right, Google. So let me get back over here on the 1030. So I did buy Google back on the 2nd of July because we had a 1030 SMA cross. This is a good back-tested long-term approach to trading Google. It does back test well. So I did buy this based upon this cross. So this is the entry. I just want to show you the entry that the 10 crossing over the 30. Now this was not a mechanical trade. This was not a robot trade because it's a stock. So I entered it based upon the crossover, but I'm going to exit it based upon discretion. So I did buy it here the next day, which was Thursday or Wednesday, mixed up with this week. I did exit it, and the reason that I exited it was it tested this previous high and closed below. It also tested the 200-day and closed below. So that was enough for me to just go ahead and get out of the trade. Now, obviously it went up. That's just how it goes, right? But that was my plan. But I will re-enter Google again today because it is now closing above the 200-day. So then I will be using my 200 below me as my initial stop because there should be some theoretical support here at the 200. Don't know for sure, but that's the plan. So I will be buying this at the end of the day as long as it closes above 1125.34. Goldman Sachs is up a little today. It's holding the 70 RSI. There's nothing for me to buy here. We did buy this back here again on a close over the 200-day, close above the previous fractal. It gapped up major our way the very next day, gapped up again and reversed, and we exited the trade. So this, I think we exited the trade. Yeah. All right. Yeah. We bought here, we phased out to here, we phased out to here, and then this day here when it lost the 70 RSI is the day I exited my trade. But that was a monster trade. It was only a 3-day trade, but that was a monster trade. Again, with the close above the 200, close above the fractal. IBB broke out to a new range, and then today closed back in the old range. So technically right here, this is a false breakout. So nothing for me today on IBB. Intel has not liked the prices over the 200-day moving average. I guess you could have bought this with the buyback above the 200-day moving average on Wednesday. I did not do that because we have this big down bar, huge bar. We only rallied to about 50% of this, so that is why I did not take this trade, and good thing I didn't. IWM, we talked about that. We bought that based upon the 1050 SMA cross, so it has been a profitable trade. We did phase out some shares up here, not quite to our profit target today, so that one's working fine. Coca-Cola. All right, so there is nothing here today, but we did buy this back here back on July 1st when we had this higher high. We came back into the value zone. We stopped moving down, we moved sidewards, we had a nice V1, or we had a rejection of the previous day, and then a close back above. I did buy this intraday right about here because of this V2. Here's day 1, day 2, day 3, day 2, washes out day 1, and then the time I bought it, it was above the close here. So had a great trade all the way up until Wednesday. I did exit this on Wednesday because similar to Google, we took out the previous high and we closed underneath. Earlier this morning, I was like, boy, was I glad I locked in profits on that, but it's reversed up. But it's still, it's right about where I sold it yesterday. But anyway, nothing on Coca-Cola, but this is a good example of, a higher high, back into value, move sideways, spike down, reverse back up. So this was a really good 2-day trade for us. Lockheed Martin is really, 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 really strong. We had this previous high here. This was acted as resistance. We broke above it. Intraday, we tested it one, two, three, four times back into the old range. But it was still strong enough to close. That's why closing prices are the most important. It's really moving up nicely. It's too high for me right now. It's actually parabolic. Here's a nice example of a V1 entry inside the value zone, inside the 1 and the -1 ATR channels. Make a higher high, come back in, move sidewards, spike down, reverse, day 1 or day 2 washes out day 1 and closes above. So we did buy here. You can see that was a really nice, wonderful, easy trade. Got out somewhere right around here. So I was looking for that pullback, and it came, but I did not get the V1 or V2 entry to go along with it. But it has really moved up, so if anyone has Lockheed Martin, congratulations. Let me just take a look here. Okay, MasterCard. So MasterCard currently 65.86 RSI. I would not be buying up in this area. I'd like to see a pullback back into the value zone. Again, look for a V1, V2 entry. We had a couple good trades on MasterCard. I don't do a lot of shorting, but I did short MasterCard back here on the 10th of June. The reason I shorted it for two reasons. One, intraday, we touched the 70 RSI and closed below it. We also were above the third ATR channel, closed below it. So that was my short signal. You can see it moved down nicely for us. I phased out, phased out, phased out, phased out. But then when we start getting into the value zone, and you look, and it looks like we have a V1 or a V2 entry to possibly take, that's when I'm going to look to get out of my short, possibly go long, and that's exactly what happened. So we went short here, we came back down into the value zone, we moved sideways. Here's day 1, day 2, day 3. Day 2 washes out day 1 to the downside. Day 3 reverses, closes above day 1's entry. So we reversed. Actually, we got out of our short here, but the next day we entered long here, had a monster day the next day, kind of moved sideways, hit another profit target here, and then it reversed. I did exit on this big bar, but it was still a nice profitable trade because we got rid of about 50% of our shares up in this area. Then it came back down into the value zone. I was looking for a V1, V2. It wasn't there, so I didn't get this second move. 3M, having kind of a tough day today. So nothing there, but keep in mind, we did come from a higher high. We are in the value zone. So now going forward, we need to see this move sideways, see that it has some support, and look for that V1 or V2 entry. So that's the plan with 3M. Nothing today, but just like I talked about planning in the future, you know, let's watch this next week. If we can get a couple days, 2 or 3 days sidewards movement, spike down, reverse back up, then that would fit our plan, right? Merck. Nothing here on Merck. Nope. Microsoft, very, very strong. 64 RSI, so a little too high for me to want to buy something here today. Netflix did have this nice rejection back here off of the 200-day intraday or at the close of the market, and we did have a bit of a bullish divergence here. I decided not to buy this, but it's okay. It's moved up really nice since then, but this does show you the strength of double bottoms with bullish MACD divergences. Nike has been all over the place here. It's a 61 RSI, so I wouldn't be interested in Nike. Okay, well, here is one of our current positions. Again, we did buy this on Wednesday with this close back above the 200-day. Went way down today. Good thing we held on. Currently, right now, our line in the sand is a close below the 200-day moving average, and it is above the 79.92 mark. So as long as it stays above this 79.92, I will keep the position that I have in Philip Morris. All right, here, PayPal. This is another current position we had. We bought this here based upon the V2. We've been scaling out since we've entered the position. My initial stop on this is going to be a close below the 5-day moving average or a close below the previous day's low. So currently right now it does look okay. So if it closes there, we go ahead and keep it. QQQ, so it's up in pretty rarefied air, 66 RSI. I certainly wouldn't be buying it here, especially up here against the third ATR channel. We did buy the Qs back here on June 4th when we had this close above the 200-day moving average. In addition to that, we had a V2 entry. Here's day one. Day two thoroughly washes out day one. Day three closes above day one. In addition to that, intraday we went below the third ATR channel, back above the third ATR channel, and on top of that we were under 30 RSI, and then we closed above 30 RSI. So that was a major buy signal because we had all these signals lining up. There was a confluence of these signals. So we did buy long here back on the 4th of June, and you can see it moved up nicely since then. We phased out, moved sideways, didn't do much with it, phased out, back down a little bit, and then I did exit the entire trade back right, the remaining shares up here at about 190. So this was a monster trade, but the reason I got into it, close under the 200, back over the 200, close under the third ATR channel, back over the third ATR channel, under 30, over 30. And in addition to that, the cherry on top was the V1, V2 entry. So you can see that was a monster trade we had. Silver, so silver has made a higher high. It's come back. It is in the value zone. You can see we did thoroughly reject today the third ATR, or the 1 ATR channel, and the 100 or the 200-day moving average. I'm not going to buy this today. I wouldn't blame somebody if they did, just because we did test the 200, we did test the -1 ATR channel, and probably most importantly is if someone were to buy this today, use their 200-day as their initial stop loss, and so most likely you would have a very small loss if you were wrong here. I'm not going to buy this though, and I'll tell you why. This bar doesn't, it looks big but not too big, but in reality this bar is this big because that's where we closed the previous close. So this bar is this big, so I don't want to get involved with that large of a bar. So but technically, yeah, you could buy this here at the 200 with any close below, giving yourself a good risk to reward, but I really shy away from huge bars like that. Hey, Dr. Jorgensen's here. How you doing, Bruce? Bruce says, come on, guys, smoke it up, help PM. Yeah, well, it has reversed quite a bit compared to earlier in the day. So it does, at this point, it looks pretty good that we'll stay in the trade. Oh, where was I? Okay, SPY, we're going to go ahead and we're going to buy the SPY at the end of the day. That's just our regular. Square, we talked about that earlier. We had that big 14% move from here up to here. However, today, it is staying above the 200-day moving average, which is positive. If you can go close above the 200 and stay there, the longer you stay there, the better. But it's a 62 RSI. There's really no reason for me to be entering here. SSO 6843 RSI. I do not want to buy there. There's nothing there, but it's a good example. We did buy SSO back on June 3rd when, again, we went intraday under the third ATR channel, back over. We went under the third ATR, the 30 RSI, back over. So there were two nice entry points, and you can see it was a wonderful trade. We phased out from here right up until about here, but we were patient and we waited for that trade, right? So don't just get into a trade because you feel like you want to try to make something happen. Don't make something happen. Just let it come to you. Let the trade come to you. AT&T has had a really nice big run here, hasn't it? Did not enter AT&T, but any of you have it, awesome. It's really looking nice. TLT, nothing there today, but back what I was talking about was like laying things out in the future, waiting the trade to come to you. This is one where I waited for the trade to come to me. It didn't work out for me, but just to show you an example of a bearish divergence, here you have a high. You move back down, you have a higher high. There are no MACD bars here. Technically, if this is higher, this should be higher. But this high was lower than this high, had higher bars. So that, it's a bit of a bearish divergence. So I didn't short here. I waited till we had a lower high and a V1 to the downside. I did short here, immediately went against me, did start moving my way. Next day, it closed above my stop. And I was glad that I got out because the next day it went up, but today it crashed back down. But that's fine. That's just how it happens. But again, even if you wait for a really nice, great trade, you have a lot of hope for that trade, doesn't mean it's going to work out. And this one did not work out. So Tesla has been moving sideways. It had some good news on Wednesday. Gapped up but closed lower. Nothing there today. Look at natural gas today. Big day today. I wouldn't be interested in buying anything here. It did trigger a fractal, but we have the third ATR channel and the 50 moving average above. So nothing there, but a lot of volume there today. Oil is recovering today, which is good. Nothing on oil. At this point, I probably have to have a close back above the 200 at the minimum. Here's the dollar we talked about. The dollar got really strong today with the jobs report, but nothing there. Visa, a little too high for me. Nothing there. VIX is starting to perk up. Yesterday, Wednesday, we were under 30 RSI. Today, it looks like we're going to close above 30. I am going to be taking a 1/4 position in VIX today based upon this. And you might ask, why are you taking a quarter position? Don't you take a half position if it's under the 200? Yes, that's true, but the VIX, the volatility of the VIX is much greater than stocks and indexes generally. So it's a volatility issue. It's much more volatile. So instead of taking a half position, I'm going to take a quarter, which, trust me, in the VIX is like taking a half or maybe a full. So if this does close above a 30 RSI, I will be buying a quarter position of the VIX based upon that we closed under the 30 the previous day and looks like it's going to close above the 30 today. So that is one potential trade for today. Verizon, we did buy Verizon. Here, when we had this nice V2, we made a higher high. We came into the value zone. We moved sideways. We had a V2 entry. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above. I only bought a half a position here because I felt like these big bars, although long term they're bullish, in the short term they seem a little overbought. So I only went ahead and bought a half position here. I was waiting for a close down here to add my other half, but I didn't get it. But I'm still glad that I have it. Did hit one profit target today. Energy made a higher high. You can see it's kind of starting to work itself back down into the value zone. So if we can see the prices move sideways, get a V1, V2 entry, that would be my signal to go back long and possibly challenge these previous highs. XLF, well, tension Mount Doji. So, today XLF on my charts did tag the 70 RSI and now we're lower than the 70 RSI. So, me personally, if I would have bought this back here like you did, that would be my exit, but that's just my opinion. It might just continue to go up. You could look at other things like it closed below today's low. But let us know how you manage that trade going forward. That was a great trade, Mount Doji. But let me know how you manage it going forward. Real estate, nothing there. Utilities, here was a nice V2. Did move up, back down, but nothing there today. And healthcare. All right, so the market closes in 5 minutes. Let me take a look real quick at our potentials. So our potentials here, I'm going to rebuy Google at the end of the day because of the close back above the 200. I'm going to buy VIX at the end of the day if it closes above 31.45. IWM, let's look at our current positions. IWM looks fine here today. Philip Morris, as long as it closes above 79.92. So Philip Morris, sell under 79.92. So we'll have to watch that one pretty close here, and this will be, end of game decision. But if it closes above the 200, I will keep it. The line in the sand is the 200-day moving average. PayPal does look fine. And SPY, of course, we're going to go ahead and I'm going to buy that at the end of the day. Verizon is still fine. Boy, we hit that profit target right at the very top. Oh, and let's look real quick at TCS. Mount Doji sent this over. So look, I mean, there's a lot of bullish things about this chart. Just real quick, we have a higher low. We have a beautiful V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 obviously is closing above day 1. We've closed above the 200-day moving average. We've closed above actually all of these moving averages, and we're only at a 55 RSI. So that's really, really good. I'm not going to buy this because I'm not familiar with that stock, but one, you could either buy you could buy a full position. 2, you could buy a half position and try to pick up your other half somewhere here, or 3, you could just wait for it to come back a little lower. But then of course, if it moves away without you, then that's too bad. So I'll get back to that trade. I just want to make sure I have enough time here to make our trades here. So I do have okay, SPY, I've got that. Google, I've got that. So it looks like so I've got those in automatically. So, and then the VIX. So yes, I am going to buy 1/4 VIX as long as it stays above 31.27 here at the end. Google, I'm going to buy with that close above the 200. And the VIX as long as it closes above 30 RSI. IWM is fine. Philip Morris is going to be close. And then the SPY trade. I've been using these market on close orders lately, guys, and it's really nice because instead of me having to put in all these things at the last second, I put it in intraday, and then if it doesn't work for me, I just hit the cancel on the market on close. So it makes it a lot easier. Can't believe I've been doing this for 24 years without that. Man. So I'm really glad Bruce got me onto that. Ooh, VIX is going to be close. All right, so we've got 1 minute here. Google's fine. Philip Morris is going to be fine. PayPal is fine. And we'll buy the SPY right at the close. Ooh, the VIX is going to be close, everybody. It's going to be close. All right, so at this point, I'm not buying the VIX because it's under.
Order cancelled.
All right, so I did not buy the VIX because it closed under the third ATR channel. All right. So, all right. So I rebought Google at 1132.66. I bought SPY at 298.46. All right, so the new entry on the SPY for the overnight SPY trade is 298.46, and then I'm going to sell this first thing in the morning. And then we added back Google at 1132.66. So going forward, that 200-day, a close below the 200-day is going to be my stop. So, you know, we made a nice one-day profit on it. We got out. Unfortunately, it went up. I mean, good for people who have it. I'm glad that for our particular trade, it did go up. So we have to buy it a little higher. But now I know I have some confirmation of that 200 below me. So, yeah, so that's it. So we bought the SPY, we bought the Google, did not buy the VIX because it did close under the 30 RSI. So a little bit of a red day today, not too bad. You know, we've had such a wonderful June and July, except for today. So, you know, that's how it works. You're going to have losses. There's going to be times where we have weeks or months of losses literally in a row. So don't get cocky when you're making money. Just be conservative, position size correctly, 5% position size, 10% position size. Just be careful always, please. You know, you're not going to become a good trader unless you get experience, and you're not going to get experience unless you stay in the game, and you're not going to stay in the game unless you position size correctly and learn how to trade. A lot of people blow up their accounts in several months. How could they possibly, you know, get years and years of experience? The solution to that is small position sizes to give you experience and to increase your skill. So, all right. So if anybody has any questions about anything I did today, or if you'd like me to take a look at a chart, please let me know. I'm happy to answer them. Just enter them in the chat. And then before we get to the answers, I do want to just put in a quick little plug for myself. I do offer private one-on-one teaching, coaching, and mentoring lessons in the evening time via Skype. So, you know, if that's of interest to you, please let me know. My email is in the description of this video, my hourly rates. But generally, you know, it just starts with just an initial phone call, just a free phone call, so we can get to know each other a little bit. I want to know a little bit about you. I want to know a little bit about your trading career, what got you into trading, you know, what methodologies you're using for trading, what challenges you have, and ultimately what your goals are. And then, you know, I'll put together a custom lesson plan for you that we'll go over when we have our Skype calls. So I've had really great success with my clients, turned a lot of losing traders into winning traders.
Order canceled.
So anyway, if that's of interest, you know, just send me an email, or you can actually even send me a message on Twitter. And then also, if you like this channel, if you're getting some value out of this channel, you know, please subscribe if you haven't already. And also hit the thumbs up button. It really does help build the channel. And I really appreciate it. If you just hit the thumbs up button, it helps Google get it out to more people. And Lord knows there's a lot of people out there that need help with trading. I mean, about 86%, something like that, lose money. So, you know, let's help them get to the channel too, so we can teach them some good trading principles. So, okay, enough of that. And let's see if anybody has any questions. Mount Doji says, I had made not the RSI as well. I'm glad you confirmed it hit 70. Yes, it did. I took my final profit and I'm out now of XLF. It was a great trade. Hey, congratulations, man. What a great trade. What a great trade for Mount Doji. You know, if any of you have trades, let me know about them. I love to follow them, but look at this trade. That's a beauty. That's a beauty. Congratulations, Mount Doji. Mount Doji says, do you ever use stock screeners? That's how I found Container Store TCS. You know, I don't. And just because I don't doesn't mean it's not a good idea. You know, if you put in your parameters, you put in your screens to find. But I personally, I like my watch list. You know, there's some leading stocks, there's some monster stocks in there. They're the major indexes. I like to look at them every day so I kind of get an idea of their personality. And also, you know, another reason I like to go down through my stock list is I'd like to see the interplay between gold and oil and the VIX and the market. And I feel like if I just used a screener, it would pull out a stock I wasn't aware of. I didn't know the personality. So it's not a bad thing to do. It's just not my personal preference, Mount Doji. Andy says, thank you, Greg. Have a great weekend. Thank you, Andy. I appreciate that. It doesn't seem like it's the weekend. It seems like tomorrow's going to be Tuesday to me. So, all right. Well, it's a beautiful day up here in Utah. I'm going to get my hiking boots on and I'm going to go out hiking. But if anyone has any other questions, please let me know. Oh, and just a few more minutes on TCS for Mount Doji. But yeah, I mean, a lot of good things happening here, right? I mean, here's a V2, day one, day two washes out day one, big strong bar back above. I mean, obviously a V2, it's technically a V1. Here's day one, here's day two, but it's one of these ones where kind of a V1 and V2 triggers in the first day. Did close strongly above the 200-day moving average. MACD is positive. We're about 50 RSI, but it's just a little bit too big of a bar for me. I think, you know, going out into the future, I think this is very bullish, but over the next 2, 3, 4 days, you know, there's a good chance we'll come back into this range. And that if I were to get into this trade, that is where I would enter this trade. You know, the other option is you could take a half position here and keep it, and in case it keeps on going, that's a possibility. I do that quite often. If I get a big bar on a stock that I know, I'll go ahead and buy a half, and then if it comes back halfway and holds that halfway mark, that's when I'll add my second half. Yeah, there's a few options to do it here. But me personally, I don't think I would buy a full position here. But yeah, not too bad. One thing I do want to point out though, Mount Doji, is this is a V2, but remember the day one bar of the setup. Here's day one. If it's bigger than 1 ATR, it usually concerns me, and that's usually a red flag for me. You can see 1 ATR is this distance to this distance. This day one of the V1 and V2 was larger than 1 ATR, so that does concern me a little bit. And this previous high up here concerns me a little bit too, so I hope that helps. Mount Doji says, yeah, the screener results were all new names to me. Yeah, that's the thing that concerns me. And I'm sure a lot of people will say it shouldn't matter, and maybe it doesn't, but you know, I get to know and understand the stocks in my watch list. You know somebody when you see them all the time, and I think I know those stocks better when I see them all the time. Constantine, thanks for all your info. How many calls or puts of SPY you buy in the close every day? Well, I don't buy calls or puts, Constantine. I'm not buying options on them. I just buy shares. And I use a 10% position size. So, you know, let's say you had $10,000 in your account, you'd buy $1,000 worth of the SPY. If you had $100,000 in your account, you'd buy $10,000 worth of the SPY. But yeah, I don't use calls or puts on the SPY. Mount Doji says, I did add some names from the screener to my watch list, like DKS. I wish I saw it cross the 200 MA yesterday. Now let's take a look. Yeah, that's a pretty good setup, Mount Doji. I mean, you have you have a lot of things going on here. You have a higher low, right? You have a higher low. This low is higher than this low. You have just the standalone break above the 200, and you have a V2. Here's day one, day two washes out day one, day three closes above day one's close. So you have a higher low, break and close back above the 200 with the V2 entry. Woo! That's a monster. Honestly, if I would have seen that on Wednesday, I would have bought that as well. So, I guess that proves your point that, sometimes a screener is good, but yeah, what a monster trade. I would have taken that 100%. I would have taken that Mount Doji. I think, I would, based upon that setup. Constantine says, okay, 10% got it. Thanks. And it doesn't have to be 10%, Constantine. It could be 5%, but just a minimal percentage, because you are going to go drawdowns. But remember now, that's a good long-term approach. I mean, since 1993, so it does have an edge. So, but just be careful with your position size, and you have to do it consistently too. Not one day I feel like it, one day I don't, right? So, Mount Doji says, I didn't notice that V2 either. Wow. Yeah, after you start doing this for a long time, Doji, when your world revolves around V1s and V2s, you're going to see them everywhere. You're going to see them out in nature, I swear. But they'll pop right out to you after a while. So where did the market close? So the market closed down the Dow closed 43, the NASDAQ down 8, the S&P down 5. So anyway, big reversal day back up today. So we should be thankful for that. I'll tell you. So just real quick, IWM, we're in that 1050 SMA, so that's working out well. Philip Morris was a little scary, but it kept us in today. PayPal was a little scary, but it kept us in again today. So moving forward on PayPal, most likely will be a close below the 5 or the 10. I'll just have to see how that works out tomorrow. We bought our SPY here at the end of the day, 298.46. We did re-enter Google here with the close back above the 200. Verizon, happy that we hit that one ATR or that one profit target right near the top, but this one looks fine. Where is going to be my stop on this? Probably the 20-day, a close below 20-day. Dividends coming up too. And then TCS, yeah, that's Mount Doji's. All right. Mount Doji says, I did notice Telcom is doing well right now. All around, I'm in Verizon as well. Sprint is doing decent as well. Yeah. Yeah, we'll have to see what happens. I mean, it was a good signal. It was a big, strong signal. But just like with your other stock that you just showed me, I only bought a half position here because of that big bar. If we had closed back in here, I would have added to it, but it never did close back in here. Now, remember, if it closed under 50% of this bar, I would not have added. So it's a fine line. Okay, well, listen, everybody, thank you for coming by. I really do appreciate it. Mount Doji, it's good seeing you, buddy. Keep up all the hard work and the study. You're doing a great job. I'm proud of you, man. Constantine, thank you so much for showing up today. I really appreciate it. It's nice to have you in the group. I hope you come back. Andy, it's good seeing you, my friend. Dr. Jorgensen, good seeing you, my friend. I'll talk to you later. Thanks for coming by. Steve Burns, again, thank you so much for coming into the chat room. I'm always excited when you're here, and I know everyone else is too. And it's an honor. And thank you again for the Twitter post today. I really appreciate that. It was very kind of you. William, good seeing you. Hope you're doing well. Hope your trading is going well, and hope to see you again. And I think I mentioned everybody. I did. Thanks to my trading partner, Katie. She's here, helping me out with all the trades. That's my German Shepherd. So, all right, unless anyone has any other questions, I think we'll call it a day. But, go out and do something nice for somebody today. Give them a smile, hold the door open, give them a wave. They may need it in their day, and it really might make their day a lot better. And then they may go on and help some other people and so forth and so on. So, do that every day, just a little something. So, all right. Okay, everybody, listen, if you have any other questions that you didn't get to today, feel free to email them to me or send me a message on Twitter. And hope to see everybody on Monday. I keep thinking today's Monday. Today's Friday. So good trading week. It's been a nice profitable week so far, and hope you have a nice weekend. Have fun, and hope to see you Monday in the last hour of the market. So take care, everybody. Have a good one. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors, such as lack of liquidity. Thank you.